Private foundations are a unique class of 501c3 organization, so unique in fact that they have their own exclusive version of IRS Form 990 called the Form 990-PF. Hi, I'm Greg McRae, CEO of Foundation Group, and in this video we're going to examine just what makes IRS Form 990-PF so different from its counterparts. Well, like a lot of the other Form 990s that we've talked about, the 990-PF requires details about expenses and revenue by category, but because this is for private foundations only, these disclosures are really more concerning things that are in line with private foundations, which is different than what you would typically see with public charities. So from a financial standpoint, what you see a lot of focus on things like investments, endowments, earnings, and capital gains. So it's a little bit different than the typical donation or program service revenue type disclosures that you see with a public charity. Now, people still donate to private foundations, so it's not like that information's not there, but what you do see is a disproportionate share of attention paid to things revolving around endowments or investments. You also see something called a calculation of an excise tax on capital gains or investment earnings. That's also something, that small excise tax is something that you do not see public charities pay. Something else that is unique about private foundations and 990-PF is disclosure revolving around disqualified persons. Now, a disqualified person is someone the IRS considers to be an insider, such as a board member, a key employee, maybe a large contributor, or a family member of the same. These people can usually easily be paid as an employee of a public charity, assuming that the right arm's length transactions are in place to get that person hired. In a private foundation, because you often have such a related board, it's not so easy. It's able to be done, but it's got to be done for what the IRS calls personal services. And personal services are kind of misnamed, in my opinion. They really are more along the lines of professional services, such as accounting, investment advising, and so forth, maybe legal fees or legal services. But the IRS requires that to be both reasonable in pay, so not a large compensation amount there, but also necessary for the function of the organization. In other words, if the insider wasn't being paid to do it, somebody else would be. And getting those type situations wrong can result in some serious penalties and fines for the nonprofit if they are found to be paying insiders in particular that they should not be paying. And this is something, this type disclosure is very unique to the Form 990-PF compared to the other Form 990s. Something else that is quite a differentiation between a public charity and a private foundation is the requirement that a private foundation distribute 5% of its assets for a charitable purpose. Well, this is a calculation that has to happen every year, and it's not as straightforward as just taking a rough 5%. It's actually a fairly complex calculation where you determine the average investment value of the organization, what are the average asset valuations, and then take that over a year's time to determine what that distributable amount is. And that is based on a 5% number. Now, it usually comes out pretty close to a rough calculation, but it is a little more complicated than that. That has to be done every year. And for years that an organization gives more than the 5%, the amount above 5% can be carried forward to help offset other years for up to 5 tax years. Now, if you give less than the 5%, the amount that wasn't distributed, if it's not offset by a carryover from a prior year, can be subject to penalty. We've sort of ended each video about Form 990 talking about filing thresholds and due dates. Well, the same is true here as for the others with regard to the due date anyway. This return is due on the 15th of the 5th month following the end of the tax year. So again, if you are a December 31 year end, this is going to be due on May 15. Like the other Form 990s, this is also extendable by 6 months if you file a Form 8868 by that May 15 deadline. That'll give you an extra 6 months. Of course, if you have an off-calendar fiscal year, that 15th of the 5th month requirement will follow you. Now, here's what's very different from the other Form 990s. The filing thresholds are based on revenue. So a 990N versus a 990EZ versus a full long Form 990 are determined by gross revenue earnings of the organization. This is not true with private foundations. Private foundations are required to file a Form 990-PF each and every year regardless of the amount of income. So in other words, you could have a year that it receives no donations, has no income of any kind, and in fact the investments may have even taken a loss on the year, but the IRS is still going to require that Form 990 be filled out and completed and filed that year. Form 990-PF is a complex tax return. If you happen to read the IRS instructions, they estimate 33 hours of preparation time. Well, as the old saying goes, your results may vary. Needless to say, preparation is best left to the experts. So if your foundation needs help, call us. Our staff accountants know these returns inside and out, plus they're not going to need 33 hours to do it. Well, if you need more information, see our companion article on our website and others like it at 501c3.org. Thanks, and we'll see you next time. Thanks for watching our video. We encourage you to check us out on social media. Facebook is facebook.com/foundation group. You can follow us on Twitter at twitter.com/foundation group. If you're watching this on YouTube, be sure and subscribe to our YouTube channel. And finally, we're always on the web at www.501c3.org. Thanks.